Hey everyone, welcome back to Corporate Decoder. Today we're cracking open a report from Northwest Natural. It's going to be a wild ride of natural gas numbers, new ventures, and the never-ending fight against climate change, all bundled up in one very exciting financial report. Just kidding, but let's decode this thing anyway. We're diving into their quarterly report for the period ending March 31, 2025. The big headline here: they're making more money, but they're also spending more. Northwest Natural is juggling expanding their business, dealing with environmental costs and new regulations. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we can talk about all this stuff. First things first, a quick word on forward-looking statements. Basically, everything they anticipate, believe, or expect might not actually happen. It's crystal ball gazing, not a guarantee. The important stuff is all buried in the risk factors section of their annual report, so we'll keep an eye on those uncertainties. Let's hit the numbers. Looking at the income statement, we see operating revenues of $494 million this quarter, a nice jump from $433 million last year. Operating income also saw a big increase from $110 million to $154 million. That said, it doesn't mean they get to pocket all that extra revenue. Operating expenses were up too, largely because of the rising cost of gas and increased spending on operations and maintenance. Net income, the actual profit they get to keep, came in at $88 million, up from $64 million. And just how did that translate to earnings per share? Well, earnings per share, or EPS, jumped from $1.69 to $2.18, so going pretty well for them. Moving on to the balance sheet, which is like a snapshot of what the company owns and owes. Northwest Natural has $5.7 billion in total dollars. That's up a good amount from last year's $4.8 billion. The biggest chunk of their assets is their property, plant, and equipment. Basically, all the pipes and infrastructure needed to get gas to your home, worth about $4 billion. On the other side, they've got $51.14 million in current liabilities, which are debts due in the next year, and $2.2 billion in long-term debt. That is something to consider because they have more debt compared to last year. Now, let's look at where the cash is actually going and coming from. Cash from operations is up from $125 million to $180 million. However, cash used in investing activities is significantly higher due to a pretty big acquisition we'll discuss next, which has reduced the amount of total cash available. Looks like most of the available cash was spent to acquire other funds. The biggest number under investing activities is the two ads and $70 million spent on acquisitions. Northwest Natural is growing through purchases. They raised additional cash, but it's a tiny amount compared to the debt issuance for about $1 million. So what was the money for? It seems that one of the biggest things they are dealing with is industry regulation. They talk about how the accounting practices of the regulated businesses are following the rules of different organizations, but they also capitalize or defer certain costs based on what the public utility commissions decide. One of the tables in this report highlights just how much money they have tied up in these regulatory deferrals. For example, they have a long list of items that have a lot of money tied up in them, like environmental costs or income taxes. Here's where that big cash spend came from. They acquired Sea Energy, a Texas-based natural gas distributor, for a cool $271 million in cash. They must be pretty bullish on the Texas market since Sea Energy serves the Houston, Dallas, and Austin areas. If this purchase occurred last year, it would have increased their revenue quite significantly and increased their net income. It will be interesting to see whether that actually plays out in the coming years. Looking at their segments, there's a big shift here. NW and gas utility remains a huge part of the business, but now they're showcasing Sea Energy gas utility and NW and water utility as distinct segments, highlighting their diversification beyond just Oregon and Washington gas. Looking at the debt situation in the new segments, it appears that Sea Energy has a term loan and a credit facility that is guaranteed by NW Holdings. So they are counting on this new business to pay off. Let's not forget climate change, that's the big one. A liability range of $52.4 million to $350 million is just the current estimate for known contamination around Portland Harbor. This company is going to have to pay up quite a bit. So what's the story? Northwest Natural is growing, diversifying, and dealing with new complexities. They're making smart moves with acquisitions, but the debt is something to keep an eye on. At the same time, they're going to have to figure out these environmental regulations and navigate that transition towards renewable. If they can deliver continued results with their new investments while responsibly addressing environmental issues, the future is bright. They continue to make progress to deal with changing regulatory climate and economic landscape and have a clear direction with their strategic business investments. UNW Natural is definitely trying to chart a course into the future, balancing environmental concerns with meeting energy needs. Their results this quarter weren't bad, and their management seems to be taking reasonable actions to invest in themselves and their operations. It remains to be seen, however, if everything will pan out. Alright, that's our breakdown of Northwest Natural's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.